Hello, this is Patrick White from AA Commodities and Investments with your Tuesday, August 18th morning market update. Overnight, we've got grain markets slightly lower here. December corn is down 1/4 cent at 344.5. November soybeans are down 1.5 cents here at 913 3/4. The corn market is seeing a little bit of pressure here as traders' fears over crop damage were realized in the crop progress report yesterday afternoon. The USDA reported corn good to excellent ratings at 69% good to excellent, and that was down 2% nationally versus the 68% expected by the market. Dough stage in corn is at 78% versus the 69% 5-year average, and corn that's dented is at 23% versus the 24% 5-year average. And that dough stage being up 9% versus the 5-year average, that's just kind of indicative of the hot and dry weather that we've had, and the crop is maturing on a lot faster than in years when we've gotten a lot of rain and it's cold. So the majority of the cut in crop ratings, down 2% nationally here, comes from the 10% drop in good to excellent ratings for Iowa. And that 10% good to excellent cut gave an increase of 5% to the very poor category for Iowa, a 4% increase for the poor category for corn, and a 1% increase in fair condition. And that was obviously for the derecho storm over there in eastern Iowa, flattening millions of acres of corn. The report did confirm what the corn trade has been saying on this rally, and that there has been significant damage in eastern Iowa. So basically, we bought the rumor and we're now selling the confirmation, selling the fact here on Tuesday. However, the damage is not ongoing here, and we're going to need to continue to see either hot and dry weather or demand to continue to drive us higher. Right now, we still have both of those things working for us, so that's good to see. Yesterday, the December corn contract did go back and fill in the gap left here on July 10th at 343 3/4. That was a really big target for a lot of traders in the market, and I think that's the reason why we're seeing some choppy consolidation type of price action around that 343 3/4 to 344 gap level here today. So soybeans are lightly lower here this morning. Traders are liquidating a bit here after yesterday's rally and more confirmation that the U.S. soybean crop is in pretty good shape. On Monday afternoon, the USDA announced U.S. soybean crop ratings at 72% good to excellent, and that was down 2%, and that was dead on with expectations at 72% good to excellent expected. Soybeans blooming was at 96% versus the 94% 5-year average, and soybean setting pods was ahead 5% at 84% versus the 79% 5-year average. So, and that, again, that's indicative of the hot and dry weather that we've had this year, and and the early planting and things as well, too. So one thing we missed yesterday here was a flash sale of soybeans to China, and that broke actually an 8-day streak of special business large enough to be reported from China. So we'll be continuing to keep that on our minds here and looking for export demand. I think, overall, just like corn, the soybean market's staying bid on the hot and dry weather expected here and the strong export demand as well. So we'll see if that demand can show up today. Until those two things change here, the longer-term uptrend should remain valid in grains. However, it would not shock me to see today a little bit of the rally we saw yesterday get filled in and have a lower day on this turnaround Tuesday. So that's all I've got for today. Have a productive day out there, and remember that there is significant risk in trading futures and options, and it is not suitable for all investors. For more information on commodity markets, give us a call at 712-262-7606.